Inflation is something that all countries have to deal with. It's the rise in prices of goods and services over time, and it's something that can really eat into your savings. So, if you're looking for a way to hedge against inflation, you might be wondering, does Bitcoin hedge against inflation? Well, in this video, we'll look at Bitcoin as an asset, Bitcoin's ROI in the last 5 years. We'll cover the basics of inflation, the volatility of Bitcoin as an investment, diversification as an alternative to inflation, regulation on Bitcoin and crypto. So make sure to stick around until the end to find out if Bitcoin can help you hedge against inflation. So let's get started. Inflation defined. Inflation is the rate at which the general level of prices for goods and services is rising, and consequently, the purchasing power of currency is falling. Central banks try to limit inflation and avoid deflationary spirals by managing the money supply. They typically increase the quantity of money in circulation when there are signs that inflation is too low or too high. However, Bitcoin has shown a powerful ability to act as an inflation hedge in countries experiencing hyperinflation, like Venezuela. The worth of Bitcoin has risen exponentially over the past years due to rampant inflation caused by excessive government spending without any sustainable reforms. Bitcoin's digital nature means it cannot be physically printed like fiat currencies, but it also means it's not susceptible to government interference either. As a result, Bitcoin becomes more valuable as governments devalue their currencies through debasement, printing extra money, and using quantitative easing (QE) strategies in response to economic crisis, like recessions or wars. You might wonder, how do I make money through Bitcoin while inflation is so high? Well, let's first understand what Bitcoin is. What is Bitcoin? Bitcoin is a decentralized digital currency without a financial organization or single administrator, which can be sent from user to user on a peer-to-peer Bitcoin network without intermediaries. Transactions are verified by network nodes through cryptography and recorded during a public distributed ledger called a blockchain. Bitcoin is exclusive therein. There are a finite number of them, 21 million. Satoshi Nakamoto, Bitcoin's enigmatic founder, came up with that number by assuming people would discover or mine a gaggle number of blocks of transactions daily. The proof-of-work system he designed requires nodes to unravel complex cryptographic puzzles to make a block, hence the term mining. Once a block is formed, it cannot be altered without redoing the work. As more people try and mine the blocks, difficulty increases and it becomes more complex. Miners must increase their computing power to stay competitive. As you'd expect, mining becomes more difficult as the quantity of bitcoins reaches its limit. Currently, around 12.5 bitcoins are mined every 10 minutes, or about 25 bitcoins per hour. It takes about 4 years for half of all available bitcoins to be mined or discovered. Once 21 million coins are mined, which won't happen until sometime in 2140, no new coins will be discovered. Instead, transaction fees will function as an incentive for miners to process transactions. In other words, Bitcoin's supply is fixed, while its demand will only grow with time. Bitcoin's trailing 5-year return of 1,100% when the CPI increased only 18.5% suggests that the world's top cryptocurrency is indeed an efficient inflation hedge. Despite its extreme volatility, people who purchase Bitcoin would have seen their purchasing power skyrocket. If you'd like to learn more about Bitcoin and other cryptocurrencies, make sure to watch our video in the top right corner. In this video, we talk about the top 8 cryptocurrencies we believe have the potential to make you very wealthy in the long run. Diversify to hedge against inflation. Experts say diversification remains the best inflation hedge. Diversification means adding a strong array of different asset classes, stocks, bonds, ETFs, and index funds to your portfolio. Financial planners and other experts recommend keeping crypto investments to 5% of your overall portfolio for crypto-curious investors. They also say it's wise to take a position in crypto only what you'd be okay losing if its value dropped to zero. And you shouldn't invest in crypto before building an emergency fund and paying off any high-interest debt. However, we believe using the same mentality to analyze stocks, bonds, and ETFs should be implemented when looking for cryptocurrencies to invest in. Remember that we are living in a one-in-a-lifetime opportunity, similar to the dot-com era in the late 90s, where new technologies were emerging. Many people didn't know what to invest in or understand the technology, and most of the prices those days were inflated. We are reliving a similar era with cryptocurrencies, NFTs, and the metaverse. These emerging technologies are new, and the road to massive adoption is just started. Investing in Bitcoin carries a risk. The worth of the currency is volatile and can go up or down quickly. There's also the risk of your exchange being hacked, and you'll lose all your crypto. So before investing your hard-earned money, please do your due diligence. If you'd like to learn more about securely storing your crypto, make sure to watch our video in the top right corner. In this video, we'll discuss the best hot and cold wallets to store your crypto securely. Bitcoin's volatility. The value of a Bitcoin is incredibly volatile, which makes it hard to use as a currency. In addition, the price of goods and services in terms of Bitcoin can change rapidly, making it difficult to budget or plan ahead. This volatility also makes it difficult to use Bitcoin as a savings tool since the value of your savings could drop dramatically overnight. So, while some see this volatility as an opportunity for investment, it also makes Bitcoin a risky proposition. Bitcoin against governments. Many governments worldwide are still figuring out how to regulate Bitcoin and other cryptocurrencies. In the meantime, some countries have banned Bitcoin while others have embraced it. Overall, the jury's still out on whether or not Bitcoin is a good inflation hedge. The cryptocurrency's value tends to increase during times of high inflation, but due to its volatility, there can be periods when its value will drop significantly. The battle between cryptocurrencies and governments is increasing, with more countries banning crypto daily. Economies are trying to create their own central bank digital currencies, CBDCs. If you want to know more about the impact CBDCs can have on crypto, please watch our video on the top right corner. In this video, we explain how CBDCs are not the way of the future and what you should know to be prepared when the central banks launch their digital currencies. In March 2020, the quantity of USD in circulation was 4.2 trillion, and today is around 9 trillion. However, empirical studies suggest Bitcoin isn't a hedge against inflation. So why is Bitcoin and crypto not the hedge we all thought it was? One possible reason Bitcoin isn't such a hedge as it once was is that the financial system is starting to accept Bitcoin. Bitcoin futures, options, ETFs are all now available, and large institutions are buying Bitcoin. Therefore, the correlation between Bitcoin and other traditional financial assets is increasing. If you want to keep investing in crypto, we have to understand that the rules of the game are different now. 70% of crypto investors are financial institutions. So we need to learn how to use the same fundamental analysis and financial instruments these organizations use if we want to stay afloat. That was all from our side. Drop us a comment below if you're already holding Bitcoin. And what are your thoughts on Bitcoin as a hedge against inflation? I hope you enjoyed our video. Do not forget to share it with a friend who will enjoy it as much as you did. Subscribe to our channel and hit the bell icon to remain updated about all our future uploads. See you in the next video.